So, you got a couple of valuable Lego sets collecting dust somewhere. Maybe it's a retired Star Wars ship or a sealed creator expert set you grabbed on sale. And you're secretly hoping that one of these days it'll be your winning lottery ticket, a huge payout for a box of plastic. But what if I told you that banking on luck is the single biggest mistake you can make? That treating like it's a lottery is the fastest way to lose? Here's the thing. The most successful Lego investors don't gamble. They build portfolios. They use the exact same strategies as Wall Street pros, like diversification and risk management, to make sure their brick-based assets grow year after year. Some studies has even shown that the second-hand Lego market has returned around 11% annually, outperforming traditional assets like gold. So today I'm gonna show you how to stop gambling on random sets and start building a real professional Lego investment portfolio that's designed to last. I'll walk you through the core strategies step by step. And if you want to stick around till the end, because I'm gonna share the one golden rule that protects both your portfolio and your passion for your hobby. Alright, so before we get into the good stuff, a quick but important disclaimer. I am not a financial advisor and this is all for entertainment and informational purposes. Every investment, including in awesome stuff like Lego, comes with risk. So you gotta do your own homework and make decisions that are right for you. The biggest mistake most people make with Lego investing is that they're hunting for one massive jackpot. They hear about a legendary set like the original Cafe Corner, which jumped from around 90 bucks to over 2,000, and they think the whole game is about finding the next Cafe Corner. This is just speculation, and honestly, it's a losing game. You're putting all your eggs in one basket, and if that set bombs, gets re-released or just falls out of style, your investment can completely flatline. So, what's the pro approach? Stop thinking about single sets and start thinking like a portfolio manager. A Lego portfolio is a strategic collection of sets you've chosen to work together, balancing risk and reward to generate steady growth over the long haul. You're no longer just a collector or a gambler. You're the manager of your own tangible asset fund. So this takes a total mindset shift. It's less about the adrenaline rush of one big score and more about the disciplined long-term strategy of building wealth. You have to accept that some of your sets will be home runs, others will be a solid base hit, and a few might even strike out. But when they're all working together in a balanced portfolio, the overall value trends upward. This is how you go from a hobbyist hoping for a lucky break to an investor with a rock-solid plan. So the absolute cornerstone of building a portfolio is diversification. In the Lego world, that means spreading your money across different types of sets to shield yourself from risk. The Lego market can be unpredictable. A theme's popularity can fade, or Lego might suddenly re-release a classic, crushing the original's value. If all your cash is tied up in one theme, you're playing a dangerous game. First off, you have to spread your investments across multiple themes. Don't go all in on Star Wars, no matter how much the Force calls to you. A healthy portfolio mix establishes players with potential up-and-comers. So, your portfolio should have a blend of, first of all, the powerhouses. These are themes with a huge multi-generational fan base and a proven track record. Like for instance Star Wars, Harry Potter and Lego Icons, what used to be the creator expert sets. Think of sets like the Star Wars Ultimate Collector series or the modular buildings line as the blue chip stocks of your portfolio. Then you have the strong licensed themes. Look at themes like Marvel, Disney and even Speed Champions. They have built-in audiences and crossover appeal with movie buffs or car fanatics, which creates demand way beyond just the Lego fans. Then we have the dark horses in the niche plays. Never underestimate themes with smaller but fiercely passionate followings. Themes like The Lord of the Rings or the short-lived Scooby-Doo line have seen amazing growth thanks to a dedicated fanbase and limited availability. keep an eye on newer licenses like for instance Fortnite or Animal Crossing 2. They could be future home runs. So by mixing these up, you balance the stability of the giants with the explosive growth potential of niche teams. If Star Wars has a slow year, your retired LEGO idea sets might just save your day. So next up, you need to diversify by the size and the price of your sets. Different size sets have totally different jobs in your portfolio. So first we have the flagship sets, which are the heavy hitters. These are your huge, pricey sets like the UCS Millennium Falcon or the LEGO Icons Eiffel Tower. They take a lot of cash and storage space, but their potential for massive growth in pure dollar value is unmatched. They're the anchors of your portfolio. Then we have the mid-range sets, which we also call the workhorses. This includes sets like the LEGO modular buildings, the bigger LEGO idea sets, or popular vehicles. They give a fantastic balance of risk and reward, offering solid growth without the massive price tag of a flagship. Sets like the police station or the jazz club are perfect examples. And lastly, we have the small and affordable sets. This is where you can find some of the highest percentage returns. Think LEGO Speed Champions or Brickheads, or small sets with a single must-have minifig. A $10 Brickheads that retires only after a year can see a 300 to 500% return. The profit on one set isn't that huge, but they're easy to buy in bulk and can really drive your portfolio's growth rate. A balanced portfolio needs all three. The small sets generate quick cash flows and high ROI, while the mid-range and the flagship set build that long-term foundational value. So finally, let's talk about timing. Don't just buy sets that are about to retire. A truly strong portfolio is built over time, with sets at different points in their life cycle. So first, the most obvious one are the sets nearing retirement. This is the classic LEGO investing move. Grabbing sets in their final month before they go end of life is key, because the biggest value jump usually happens in the first 2 years after they're gone. Keep a close eye on retiring set lists. Then we have the new and the midlife sets. Don't shy away from buying promising sets early, especially if you can snag them at a 20% or more discount. This lowers your entry cost and boosts your final profit margin. You just have to be patient, since you might be storing them for a couple of years before they retire. And lastly, we have the vintage and the retired sets. Buying these sets that are already off the market can be a smart move, although it takes more capital up front. These sets have a proven history of growth, making them a less risky but more expensive addition to your portfolio. Alright, we've covered a lot on diversification. So if you're finding these strategies useful and want to see more deep dives like this one, just do me a favor and hit that subscribe button right there. It really helps, and let me know in the comments down below, what theme do you think is the most underrated for LEGO investing right now? So, building a diversified portfolio is only half the battle. Just like stocks, you have to actively manage your LEGO investments. The risks here are unique, and they can absolutely destroy your profits if you're not paying attention. First of all, let's talk about the physical risk. You're investing in cardboard and plastic, and the condition of the box is everything. Even a little bit of shelf wear or a small crease can lower the set's value, and major damage can cut its worth in half. This means proper storage is completely non-negotiable. Your sets need to be in a climate-controlled space away from sunlight, humidity, and extreme temperatures. That means attics and basements are usually a bad idea. Stack your boxes carefully so you don't crush the ones on the bottom as well. Stop thinking of your storage area as a closet and start thinking of it as a vault. Yes, it takes space. Yes, it takes effort, but skipping this step is like buying a stock certificate and then setting it on fire, guys. You can't manage what you can't measure. If you're serious about this, you need to track your performance with actual data. Just hoping the prices go up is not a strategy. You need to know your key numbers. The return on investment, or the ROI, How much profit are you making compared to what you paid? And the compound annual growth rate. What's the average year's growth rate of your investment? So, best you use a spreadsheet or check out portfolio tracking tools. Websites like Brick Economy or apps like BrickFact let you catalog your sets, track their current market value, and see how your whole portfolio is doing. This data is pure gold. It shows you which themes and set sizes are your top performers, so you can make smart, data-driven decisions for your next purchase instead of just guessing. So a classic rookie mistake is focusing only on what to buy, with zero plan for when to sell. A huge part of managing risk is having a clear exit strategy. Are you planning for a quick flip about a year after retirement, or are you holding for a 5+ year plan to maximize your value? The best time to sell is usually a year or two after a set retires, but that window is kind of tricky. Sell too early and you leave a lot of money on the table. Wait too long and you might get caught in the flood of other investors selling that exact same set. So keep an eye on the markets like eBay and Bricklink to see what the supply and the demand look like. Having a plan for taking profits will save you from getting greedy and helps you lock in your gains, which can then reinvest to grow your portfolio even more. At the beginning, I promised to share the single most important rule for building a portfolio that lasts. It's not about a specific theme or set, it's a philosophy that protects you from the biggest risk of all. And that golden rule is this: never invest more than you are willing to lose. That simple phrase is your ultimate safety net. It does 3 powerful things. First of all, it makes sure you only invest in sets that you are generally sure of, which keep your financial goals connected to your passion for the hobby. And second, it puts a hard limit on your financial risk. If a set completely fails as an investment, your worst case scenario is that you either build it yourself and have fun with it, or resell it with a potential loss but at least recover a portion of your initial investment. This takes all the fear and desperation out of the equation. And third, it forces you to be patient. If you're happy to hold on to a set for a couple of years because you might build it someday or fine with it to sell it at a small loss, you'll be way tempted to panic sell at the wrong time. It's the ultimate risk management tool. So let's bring it all together. Building a real Lego investment portfolio isn't about getting lucky. It's about taking a professional, strategic approach. First, you need to shift your mindset from a gambler to an investor. Second of all, you need to build a diversified portfolio across different themes, price points, and timelines. Third, you actively manage your risk by proper storage, data tracking, and a clear plan for selling. And finally, you always follow the golden rule. Never invest more than you're willing to build or lose. Follow these steps and you can turn your collection of plastic bricks from a bunch of lottery tickets into a structured, resilient, and consistently growing alternative investment. So, now I'm genuinely curious to know what you think. What is the one set you believe is a future classic for your portfolio? Let me know in the comments down below. And if this guide gave you a new way to think about Lego investing, be sure to subscribe and hit that bell so you don't miss our next deep dive into the Lego world. Thanks all for watching, and I will see you in the next video.